Welcome student. Today we will discuss numerical question from single entry system. As we know, we are all discuss about the how to solve numericals on single entry system in live lecture. But now it is necessary to record some questions for your reference. So this is the question 8 which will be discussed now. So Mr. Anil Joshi maintained his books of accounts by single entry system. His cash book for the year ended 31st December 2019 was as follows. In this question, you have to learn to identify the accounts and posting of that account. It is very important. In question, they provide you cash book, that is the summary of cash transaction, as well as some opening and closing balance of your assets. So according to this, there are the some basic cash book transaction are there. We should be post it first. First, we follow three steps. That is the first posting, then identified some basic accounts and statement of affair. That is the opening statement of affair. Then total debtors, total creditors, bills receivable, bills payable, and then we move towards the preparation of trading account and profit and loss account. It is not possible to record whole question in one point or one video, so we will continue in the next video also if it is necessary. So please refer one by one or according to the sequence of the video, so you will get the idea how to solve the single entry system in solving part. So first of that, we should divide all the headings according to their respective posting. So cash book explains you opening balance, that is the balance brought down, which is recorded in the books of opening statement of affair. So first of that, we are going and recording the opening statement of affair. What is the opening statement of affair? It is just like your balance sheet, but you cannot say it is a balance sheet because it is the opening statement of affair prepares by the businessman under the single entry system. And now we are using single entry system part converted into double entry system, and that's why we have to refer some opening balances and closing balances. Here we discuss some headings. Investment 16,000, stock 13,700. As you are aware about it, it is the date is showing 1/1/2019, which means that it is the opening date of your balance sheet or your books of accounts. Then this is the closing balance, which is we are using it for the recording of your closing balance sheet. Yes, at that time we are saying that is your balance sheet, but for the opening date, whatever we are recording in balance sheet, still we are continue the word statement of affair, opening statement of affair. So these headings again divided into where we record. It is recorded on asset side, so record asset. Then stock is also recorded on the asset side, so it is also recorded asset. Debtors also recorded under the heading of asset, both opening and closing. Bills receivable also recorded on the heading of asset, and plant and machinery also recorded under the heading of asset. Furniture recorded under the head of asset, but creditors and bills payable recorded under the head of liability. So it is recorded under the head of liability, bills payable as well as creditors. So now we prepare the closing statement of affair to find out your opening capital balance. So according to this, is there any amount related with the plant? Yes, plant and machinery are there. So according to this, we all post in the opening statement of affair. First, plant and machinery or the plant is recorded as 45,000. Then move towards the furniture. It is a 3,500. 3,500. Then next, building premises. If it is present, record here. In this question, I think there is no building and premises present here, so not recorded here. This is the format I have already prepared it and recorded under the first point of your theoretical background, where we record all the transactions. So no building and premises are mentioned. So debtors are there. Yes, debtors recorded 14,000. That is the opening balance of debtors. Then bills receivable. Yes, again we check your balances here. You can see the cursor. So bills receivable, that is your 14,000. Sorry, debtors are 21,000. Debtors 21,000 and bills receivable, it is 14,000 recorded on the opening date. Then we move towards the stock. Stock recorded 13,700 and cash at bank, which is not recorded here, but we have a cash in hand. This is the opening balance of your cash book, that is recorded to balance brought down, cash in hand. So it should, you can see here in the opening balances there is no cash balance are present, but it is present in your cash book. You can see the cursor move here. So this is the 12,300 is your opening cash balance recorded under the head of opening cash column, or under the head of cash in hand. Then we move towards the recording of liabilities. Only two liabilities are present, creditors and bills payable. On your opening balances, creditors shows the 31,000 amount as well as bills payable 7,000. So creditors record as 31,000 and bills payable, that is 7,000. When we move towards, we have to total your asset side first. So total your asset side and find your total balance. You can use sum, that is 1,09,500. So 1,09,500 is the total. So write down 1,09,500 as a total of asset as well as liability, and minus your, or the reduce your opening balance of creditors and bills payable. So you will get the difference amount. You can say this is your opening capital or the balancing figure of your capital. So 38,000 will be reduced from 1,09,500. Let's so by this way, by putting all the amounts and reducing asset minus liability, you will get your opening balance of capital or the capital through the preparation of statement of affairs, that is the opening statement of affairs. Now we move towards the next account, that is the total debtors account. You will find some headings through this heading, that is from the posting, but there are some headings which is not recorded here, and in this question it is not presented. So we will just discuss whatever the present in your question. First of that, we have to find the opening balance of debtors, which is recorded as a 21,000. You will see the cursor, and 25,000 as a closing balance, that is the balance carried down for the debtors account. So the two balance brought down debtors account gives you the 21,000 according to your question, and we have a closing balance of carry down, that is the carry down for the debtors account. So 25,000 both are given and we are directly recorded under this heading. Now we move towards the cash book. You can see here the word debtors is written here. So it is recorded on the cash book debit side, which is directly or indirectly recorded as a cash received from debtors, and it is recorded on the debtors account credit side. 37,500 will be recorded on the credit side of debtors account. So in the question they are not mentioned sales bad debts. Yes, they mention bad debts in your adjustment. There is one adjustment with you, that is a provision of 1,250 was necessary on debtors for doubtful debts, but this adjustment doesn't affect on the debtors account. So there is no amount recorded here. It is recorded in the P&L account as well as the closing balance of your debtors account. So sales returned, bad debt, discount allowed, and discount given to customer not present in this question today. So we are able to find the value of credit sale. You can see here there are the four headings which is necessary as per discussed in the video 1. That is the 21,000 opening balance, 25,000 shown in your opening and closing headings, 25,000 closing balance of debtors, and cash received, which is recorded from your cash book summary. So according to this, now we be able to find out the what is the heading and what are the amounts of credit sales. So they give us 60,700 total for closing, total amount of debtors. Out of that, 60,700 minus 21,000, that is the opening balance of debtors, gives you 39,700, which is the credit sale for your question. This is your credit sale, this is the balancing figure for the question, and it will be recorded on the credit sale will be recorded on the credit side of trading account. Credit sale will be recorded on the credit side of, sorry, we will not close this account now because it is compulsory, it is recorded. We have to record bills receivable first and then we move towards the whatever the balance on bills receivable we will discuss first and then we close our debtors account. Sorry. Now we start with the bills receivable account. First, bills receivable account you have to prepare. Opening balance, see here, bills receivable 14,000 and closing balance of bills receivable 18,000. So 14,000 opening balance, that is the balance brought down. Assets are there, so it is recorded on the debit side always, and closing balance are 18,000 for the bills receivable. Then we move towards the summary of cash book. Find out if any balance present here. Yes, bills receivable, that is the 15,300 which is received during the year and recorded as a cash received on the bills receivable account credit side. And then find out the balance of your bills receivable which is transferred to debtors account. So it is a 33,300, that is the total for the bills receivable account, less 14,000. Which will gives you the balancing figure which is transferred to debtors account, that is 19,300. So this amount will be recorded on the credit side of debtors account by the name of bills receivable. Bills receivable account which is transferred here 19,300. Now the total will be 80,000 which is recorded here also. 80,000 minus 21,000 which gives the 59,000. This is the credit sale. 59,000 will be recorded on the trading account credit side. We are already prepared here. Trading account credit side by sales. So one word is there is a cash sale, and another word is there, it is a credit sale. And credit sale will be 59,000 which is according to your debtors account. So it is recorded here also. The second effect of this amount is recorded here.